Welcome back to CFO Weekly, where we're talking with financial leaders about how to build efficiency in their teams, create time for strategy, and ultimately get results. This podcast is brought to you by Personiv, the trusted leader in finance and accounting outsourcing for over 30 years. See how Personiv's customized solutions can help you streamline your operations with teams that start as small as one. Visit the website at personiv.com to learn more. I'm your host, Megan Weis. Let's jump right in. Today, my guest is Rebecca Bacon, VP Head of Financial Institutions. Rebecca leads Upgrade's financial institutions team nationally. An experienced fintech executive, she covers all bank and credit union partnerships at Upgrade. Rebecca has worked closely with a variety of regulated financial institutions, from banks, credit unions as small as 30 million to as large as 200 billion. She has developed custom forward flow programs across a variety of consumer asset classes, unsecured personal installment loans, cards, autos, and home improvement. In her time at Upgrade, Rebecca has developed flow programs with over 200 financial institutions in the United States, far exceeding any marketplace lending platform in history. Most recently, Rebecca and her team have begun offering their 200-plus flow partners deposit liquidity solutions, creating match funding solutions for financial institutions with deposit pressure. Prior to Upgrade, Rebecca was with another marketplace lending platform, where she covered capital markets for personal unsecured loans, warehouse facilities, ABS securitizations, structured pass-through securities, as well as financial institution flow programs. Prior to entering the fintech space, Rebecca was in investment banking with Bank of America Merrill Lynch, and before that, in securities lending at Goldman Sachs in the UK. In 2023, Rebecca was named to the FT Partners Women in Fintech Rising Star list. She also advises a pre-seed B2B fintech HELOC startup. Rebecca has been a subject matter expert speaker on Credit Union Conversations, Talking Liquidity and Fintechs episode, as well as the new podcast, Fintech Cowboys, in the Rebecca Bacon episode. Based in San Francisco, California, and originally from Hartford, Connecticut, Rebecca holds a Bachelor of Science in Business Administration from Northeastern University and FINRA license Series 7, 63, and 52. Rebecca, thank you very much for joining me on today's episode of CFO Weekly.
Hi, Megan. Yes, thanks for having me.
Today, we're going to be discussing fintechs and how they're changing the landscape of financial services. And I'm really looking forward to learning from you myself. So let's jump right in. First, let's start with you, a little bit about yourself and your career journey to date.
Yeah. So about myself, I've been at Upgrade about 4 years now. So my role here, working with mostly CFOs and CEOs at banks and credit unions. So I lead our financial institutions team. But career to date, is a bit of a kind of colorful background. I started my career in operations at Brown Brothers and Harriman in Boston. I moved around to a trading desk in London, but predominantly spent most of my time in investment banking with B of A in San Francisco. And kind of the San Francisco setting is really what swayed me into my current career in fintech space.
So can you talk to us a little bit about fintechs and what they are and in general, how they're disrupting the financial landscape?
Yeah, so fintechs are financial technology companies, offer a variety of services. Particularly at Upgrade, we offer consumer loan assets, but offering traditional financial services faster with a better user experience, and they tend to acquire customers faster and cheaper, all digitally. I think we've all seen kind of sometimes mailers you may see in the actual mailbox, very old-fashioned marketing, but you'll see the average cost of customer acquisition for a financial product. Sometimes it'll say, open a new checking account, we'll give you $500. So the cost of acquisition is so high. So what fintechs, lenders, and digital banks have been able to do is really acquire that customer with a better user experience and much cheaper and at scale. So this is something that's disrupted how the traditional institutions do it, the B of A, the Wells Fargos of the world. But when you think about lending and banking, they've just done it much, much faster.
And what attracted you to work in fintech, first of all? And then secondly, can you tell us a little bit about your current role with Upgrade?
So, I was in investment banking, kind of your traditional eager finance graduate, went through an analyst class and based in New York City for a bit. But what swayed me into fintech after being, moved to San Francisco is I watched my friends and the people around me in San Francisco work on technology products that we all used and loved. And this, it was just exciting for me to see. I liked the idea of, upgrading the financial state of, of the average consumer. So this was something I was like, can I do this with my skill set? So I did leave banking, joined a fintech platform in capital markets, but wanted to do more, wanted to see how, fintech solutions, how technology can the U.S. consumer in a better financial state just with technology. So, I joined Upgrade because our products have done that, refinancing high credit card debt. We have an innovative card solution that kind of keeps people out of revolving credit card traps. So it's really, that was super attractive to me. And in my current role, so as I said, I lead our bank and credit union team. Upgrade, although a bank and online lender, we partner with banks and credit unions. So when people think about kind of the build by partner model, or they worry that perhaps fintech is competitive with your traditional banks and credit unions, we partner with them. So we've got over 200 banks and credit unions that I work with to purchase and kind of set up flow programs for our consumer assets. So that's something that's been a huge passion because we learn from each other. So we Upgrade, being that cutting edge fintech, we work with those traditional banks and credit unions to help them utilize us, stabilize their balance sheets, generate income.
And I'm curious, what's a flow program?
A flow program, so banks and credit unions are in the business of making loans, whether it's personal loans, mortgages, et cetera. If they have what we saw during COVID, excess liquidity, a lot of cash in the system and no way to deploy it. So they couldn't make loans fast enough. A flow program would be, I have this risk appetite. I would like to buy $5 million a month in personal loans and $2 million a month in auto from Upgrade. And we'll do, $60 million a year. And they set it up on forward flow. So every month we would deliver to them, that $5 million and, perhaps they wanted a 700 FICO bucket loans, kind of a fill to order, fill to demand. So we call it forward flow.
And in August 2023, Bloomberg reported that Upgrade will offer consumer auto loans for the first time, jumping into a business that some banks have been abandoning because of credit quality concerns. And apparently you guys will be offering loans to all types of consumers, including those with FICO scores as low as 580. So what is the rationale behind that decision? And why do you believe it's a good risk to take?
Yeah, so, really the timing is right for us in the sense we don't have that legacy portfolio where we were in an extremely low interest rate environment. People got, 2-3% auto loans. Now cash is earning 5%. So they have a legacy portfolio that's basically underwater and not profitable. Us entering the market now, we feel we can use our lending expertise in terms of appropriately pricing folks. Even if they have a 580 FICO, this is secured collateral. So that's something we think is complementary to our other unsecured programs, but also our partners. So those 200 banks and credit unions I mentioned, as concerns with maybe unsecured credit are rising, they want secured paper. So an auto loan has that car behind it that they could repo and have some sort of recovery. So we see demand for secured paper rising. So we think that timing is good. And although, indirect auto is new to Upgrade, it's not new to the Upgrade team. So we did hire the previous head of CRB Auto, which was then sold to Mechanics Bank. But he, this is Scott Raymer, grew that platform to $6 billion in 6 years. So we've, with him, constructed a very deep bench of industry experience. So we think we'll scale very quickly. We are live in California and doing loans there. So our value proposition is going to be around affordability, managing those dealer relationships. But we also have the partnerships for the ultimate exit of the loans. We have banks and credit unions that want to buy them full spectrum. So even going down to 580, if they have, the right DTI or the right pricing on it, it'll still be an attractive loan.
And can you explain the benefits of Upgrade, like what the differences are that the customers and partners experience compared to dealing with a credit union or a traditional bank?
Yeah, it's really that frictionless digital experience. So, if you need this is just something I like to tell folks when they don't know what Upgrade does or what online lenders do, is if you just do a quick Google search of how do I refinance my credit card debt, the first 5 hits are going to be, Upgrade, Marcus, other online lenders. You won't see a B of A or a Wells Fargo in that list. And I always find that fascinating because, that shows kind of the benefits of using some of these platforms is that we've just grown so much. So, average app to funding is a couple days. You don't need to go into a branch. There's kind of no waiting for a loan officer. Money can be direct deposited to you immediately. We can pay off your credit cards directly. A lot of that really quick and frictionless experience is what the U.S. consumer wants today. COVID kind of pushed any, digital banking holdouts over the finish line, and people, I think, are very comfortable now using digital lenders and digital banking platforms. We use a lot of technology to make things like ID verification or income verification all digital and quick. So it's become kind of the preferred source for the customer. We've seen, and it's not just kind of the COVID time, but we've seen growth, Fintech loans now comprise about 40% of all unsecured personal loan business. Everyone. So that's, the largest market share compared to banks, credit unions, or any traditional finance companies. So, over the past 5 years, fintechs went from 5% to this 40%. I mean, it's really exponential growth, and it's all backed by popular demand. That's the experience the consumer wants.
And who is the ideal customer for Upgrade?
Ideal for us, is we have all different risk segments. So we do go down as low as 5AB and FICO, but on average, it's your mainstream consumer. So there's someone, mid 40s, 100K in income, 704 FICO, uses credit, kind of carries a small balance, kind of 20% utilization. Someone who's familiar with borrowing is who uses us. It's really a full risk spectrum across the U.S. Our loan production mirrors the U.S. population. We do our largest amount of lending in California, Texas, New York, Florida. So very, very similar.
And what innovative technologies are fintechs utilizing to provide their services, first of all? And secondly, what role might AI play in the future of fintechs?
Yeah, so some of those things I mentioned in the application process are really helpful for the consumer facing. So things we can do like verify income quickly or use technology to dip into their bank account. We see they have direct deposit from who they said their employer was. Boom, income verified. We can kind of move on. So we use a lot of solutions like that to make the underwriting process for lending, very seamless. We use a software provider for the direct pay. So you get a loan from us to pay off a credit card. You never actually get the money. We send it directly to the credit card provider to pay down the loan. So some of these type of solutions are what we're using day to day to kind of improve the getting credit experience. When it comes to AI, I feel like this is, it's always a buzzword or the topic du jour. 3 years ago, it was blockchain and crypto, and now it's AI. And of course, I think AI is really going to change a lot of consumer behavior. But I always like to think, how do you define AI when you're thinking fintech and banking? I mean, this is a regulated space. If AI means just a very sophisticated machine learning model, I think that's great, from a fair lending and compliance perspective. But we have observed, enhancements to that process, especially at Upgrade. We use a proprietary machine learning model in the credit side of things, to underwrite and price appropriately. So we see, especially in my team, we work closely with bank and credit union CFOs and chief credit officers. And what are they using in terms of data points to make credit decisions? 5 to 10 things, FICO, income, et cetera. In contrast, we use exponentially more data points in terms of getting to a proprietary credit model, ratios built on top of them to get a much more nuanced approach and picture of the borrower's true free cash flow so that we can price them appropriately, to get that yield for our banks and credit unions so that we can price the loan where the consumer gets access to credit. And ultimately, they get the loan, but then the end investor, the bank or credit union, gets the return on investment. So it's kind of marrying those two.
I'm curious, you mentioned blockchain and crypto, and it's something I don't hear as much about as I used to. Do you think it's a dying topic, or do you think there's still a possibility that may transform financial services as well?
Yeah, definitely not a dying topic. We use some blockchain technology in how we store data in terms of some of our loan registers and things like that. So the technology is definitely being utilized, I think, across platforms, but it seems like what's the most interesting headline has changed from whether it's, we saw big ups and downs in the cryptocurrency market. I think that was, exciting for perhaps the people that traded it and thought about it that way in terms of an investment in cryptocurrencies. But the use of cryptocurrencies, like as a medium of exchange, I don't think we've seen take off like a lot of folks expected. And now it's kind of fallen, at least from where I sit and kind of where I hear in the fintech space, it's fallen to the wayside for AI. Now, AI is the way of the future, and I think it'll likely be similar to crypto. We will use it. We will use blockchain technology. We will use AI, but it's really a component of the broader industry.
You mentioned that Upgrade partners with 200 banks. Just curious, is there a specific kind of bank, or what's the benefit to the bank of partnering with someone like Upgrade?
Yeah, that's a good question. People ask us this a lot, like, what's your sweet spot in terms of who we serve? It really ranges. So those 200, our smallest financial institution is 60 million in asset size, and our largest 60 billion. It's a very wide range, and it's because we have no minimums to work with us. That's something our technology has helped enable, that, we can build a custom partnership for each bank or credit union without kind of a lot of additional costs. So it doesn't hurt us to kind of have smaller partners from a diversification perspective. So we do serve a lot. I would say the average, though, is kind of around the billion mark, a few billion in terms of the size of the bank or credit union. And, for them, what attracts them to us is the yield. So it's really an income play. So we saw exponential demand over 2020, 2021, when these traditional banks and credit unions just had a massive influx of cash in the system from stimulus and just lack of COVID spending and no way to deploy it. So they couldn't make loans fast enough, whether they were in their geography or whether it was within their risk appetite. So they partner with us to get the loans, in their geography or within their risk constraints. So it helps them with the lending side of the balance sheet, but in a credit risk friendly way. So they're earning interest income on all those loans. Something unique we've done is, I would say, our credit union partnership versus banks. So, banks can go out and buy anything in the secondary market. If they wanted to, they could purchase a pool of loans from a broker, get that income and move on. Credit unions, it's very different because, credit unions can only invest in loans of their members. Credit unions are nonprofit, member-owned cooperatives. So Upgrade has provided what we call a memberization experience, such that we can make that consumer with our fintech solution digitally make them a member of the credit union, such that the credit union can invest in that loan. And that was entirely new to the space in 2019. Credit unions were not able to do that in terms of purchasing whole loans. This is something we've seen regulators look at very favorably now with the NCUA to help credit unions really get all the benefits of fintech partnerships and the technology solutions.
And let's talk about financial regulation. So first of all, do they keep up with the pace of innovation?
Yeah, I would say not exactly the pace. They're definitely trying, but there's always be some lag. Bureaucracy with the FDIC or the NCUA is always going to lag a little bit, just given the nature of the beast. But there is, I would say, a high level of interest and focus on fintech to make sure, they have full oversight and kind of control and safety and soundness of all the institutions in the network. So I will say they're definitely making a very strong effort too.
And do you feel like financial regulations stifle progress and innovation? And if so, how do fintech companies overcome this challenge?
Yeah, I would say stifle. No, I wouldn't say stifle. I would say control. Maybe that's the right word. There's been a big focus in the regulatory landscape on oversight. So, you have all these fintech partnerships. How are you overseeing them? How are you comfortable with the loans they're making, or how they're verifying ID or things like that? So that, I think, is good. Obviously the regulators have their institution's best interests at heart in that sense. And the way, we've overcome it at Upgrade, and I think it's kind of the best in class way in a lot of partners. If you're looking to work with banks and credit unions and you want to work with those regulated entities, you just have to meet this standard. If you want to offer, fintech software to just regular companies, accounting software or something like that would be different. But if you want to work with regulated entities, I think there's going to be a very high bar you have to reach. And what we've done is really just a theme of transparency. So we share pretty much everything you would need to share with your regulator and your board to kind of meet whatever your risk and compliance standards are. So, we have a SOC 1 Type 2 or SOC 2. We share financials. We share credit policy. It's kind of that general theme and transparency. If your regulator would ask you for it, we will give it to you. So we try and make sure that we do have some proprietary credit models, but again, we share as much as we possibly can, such that the regulators can feel comfortable with our process too.
And how is fintech creating new opportunities for entrepreneurs? And what advice would you give to entrepreneurs looking to enter the fintech space?
Yeah, I mean, fintech is just so broad now. It used to generally be lending or banking, but now it covers such a wide variety of software or things that are labeled fintech. But I think tech-enabled finance companies, that serve the capital markets have popped up everywhere. And that's always, a different pocket of fintech for entrepreneurs depending on your interests. So I would say my advice would be to kind of pick what interests you, whether it is truly the capital markets, whether it's banking, whether it's, crypto, kind of finding your niche inside of fintech, because that fintech label is just so broad now. For me personally, what I always thought was banks and credit unions, their revenue driver is lending products. They have deposit products and they have customers and members and things like that. But what drives revenue is lending. So that's kind of what attracted me to Upgrade. We led with credit, we led with lending, and completely free digital banking came later. What I've seen some fintechs do is, acquire a ton of customers and have no way to monetize them. I think that's also something, entrepreneurs should focus on. It's not just an exciting idea or, something that's great, but how are you going to monetize it? Like, how is that going to become an exciting opportunity?
And what advice would you give to either consumers or businesses looking to partner with or shop from a fintech? What is it that they should look for?
The thing that's helped us the most at Upgrade, I would say, is just the number of partners we have. So that 200, that 205 or 210 now, whatever it is, number, so that people can speak to references. Because that's something that has just been exponentially helpful for us. If you're shopping to work with a fintech, perhaps talk to another bank or another credit union or a peer in your state, in your asset size, kind of within your network, and see how their experience has been with the platform. I mean, that's always a great way. I know it's a bit of an old-fashioned way in terms of speaking with a reference, and I know we're talking fintech, cutting-edge technology, but it is super helpful. That's what I've seen that a lot. So always checking kind of references on people's experience with the platform. But the other thing is, new platforms with great ideas, and we've seen the first movers always get the best deal with fintech. So that's something advise businesses on to kind of take a look at the net economics you can capture from fintech relationships.
And in your view, what are some of the greatest successes of fintechs to date? And what role do you see fintechs playing in the future of financial services?
Yeah, I think the biggest success, I would say, from my perspective, is the strong entrance of the credit unions kind of around 2019. It's personally been inspiring, kind of things we've done at Upgrade, but these are, as I mentioned, these are member-owned cooperative, not-for-profit institutions that really serve their field of membership. So the ability for credit unions to now utilize platforms like Upgrade for that balance sheet stabilization, we've developed so many true partnerships. It's been exposed, and they've been very complementary. Credit unions maintain that traditional feel. Their members love banking at the credit union. Their average time they bank with them is a long time. They're core customers, multiple products. What I think is if you look at a top money center bank, you get a long list of complaints. People do not enjoy banking with them. So I think the credit union fintech partnership has been a massive success over the past several years. I think we'll continue to see more of that. Credit unions are just naturally a low cost of capital because they're tax exemption. So I think it's just been a very nice way to capture the old fashioned feel and member focus of a credit union with the technology of a fintech. I think we'll see more and more of that over the next several years.
And last question, but in your role at Upgrade, what keeps you up at night? What worries you about the future?
Yeah, I would say the news, honestly. I think the effect it has. People, it's
24/7.
Exactly. And I think people could say that in their personal lives too. But I mean, the news and the media is something that, I've just seen it ripple into board conversations, CFO conversations at all these different sizes. Small institutions, big institutions are all afraid of the news. The media, average news headline sentiment has been on a downward trend since the 2000s. And in 2013, it dipped negative and stayed negative. So all news is negative, generally speaking, by a lot of these industries. So I think, a recession will be a self-fulfilling prophecy if consumers pull back on spending. That kind of false look at fundamentals keeps me up. I do like to look at more credit fundamentals, strong spending, unemployment numbers. If the Fed ever gets comfortable with a higher inflationary benchmark, I think we'll be in a good position. But what we hear in the lending space and fintech is, there's gloom and doom around rising delinquencies or rising charge-off numbers. But still in banking, it's still lending, that can all be risk adjusted. You can price for it and still get a great return on capital. So my fear is that kind of the paralysis I've seen in some financial institutions would stay the next 6 to 12 months, which could really dampen growth. But I'm hoping, that doesn't happen. We'll see what kind of Q4 brings.
Rebecca, thank you so much for being my guest today.
Yeah, thanks for having me, Megan. I really appreciate it.
Yeah, I really enjoyed speaking with you, and thanks for taking the time to be here with us today to share your experience and knowledge. I wish you and Upgrade all the best. Sounds like you're both doing some really great things.
Thanks again.
And to all of our listeners, please tune in next week, and until then, take care.
You've been listening to CFO Weekly, presented by Personiv. Please subscribe wherever you get your podcasts to hear all of our episodes. Want to learn more? Check out personiv.com. Thanks for listening.